Hey, good afternoon. And a popular question here this week is, what kind of crop size do you think we're gonna see here this year? And we always like putting things in ranges on where we're at. So I think the first thing to do is look at trend yield is 181 and a half on corn. July the USDA pegged the crop at 177 and a half. Our thinking is that this crop's going to end up being in a 172 to 177 range. On beans, trends 52. The USDA surprised us in July, keeping the yield at trend at 52. We just think that this yield right now, as we visit with producers, that we're probably in the 50 to 51 and a half range is where we're sitting at right now. Whether you want to lean to the higher or lower end of the range, I mean, that's really a personal preference. We think that really catches a lot. And then what it does for us is it tells us we're probably going to be stuck in a range in here on these prices. So in our ranges where we're at on new crop corn, is we think we're probably going to settle into a 475 to a 575 range as we move through the fall of the year. We like using retracements. A retracement from the high to the low, gave us a target at 555 and 573, and that's what we kind of use on that bounce back up to make some sales. Now with this market rolling lower, if we end up taking out the 505 to 510 support area, you could probably break this thing down to 475 to 485. If we trade near those July lows, though, just don't get too bearish, as we've got good domestic basis in here right now to offer this thing some support on a break. As we switch over to the bean market, I'm going to admit we're probably a little more concerned with beans having a more of a break in here right now, and we don't want to just switch gears on you too much, but really, we thought this market had a lot of support underneath of it. We thought we needed to add some weather premium, but as we sit here now, this weather forecast is non-threatening, and what really sticks out to us is the specs have built a pretty good net long position, and now they're sitting behind on what they're net long, and that tells us this market can roll down a little bit. I mean, we pegged some support in here in the 1320 to 1330 area, but if we end up breaking lower, we could easily see this thing down to 1285 just on some liquidation. Taking a step back, we're probably content calling beans in a 12.50 to a $14 range. As we want to wrap things up in here right now, I'm again corn, call it 475 to 575. If you want to be more defensive on this market, you're pointing towards that, hey, we're not competitive on the world market, and you believe that the yield will be at the higher end of the range. Domestic basis levels are very strong, though. That can offer support. We think there's a little more old crop corn that needs to get moved to limit the upside. On beans, it's going to stay volatile, but taking a step back, we just won't be bearish if we get down into the 1275 area. We think that there's good support as exports have picked up with beans competitive on the world market, and you have excellent crush margins to support us. Our biggest concern, though, for beans is the spec net long, or if they want to liquidate it out, there's a little more downside pressure. We're just going to wrap up quick here on wheat. Call Chicago wheat in a 625 to 7 and a quarter range. KC 775 to 875. Min wheat $8 to $9. If we're a little more defensive on one compared to the others, we'd point to Minneapolis wheat, as spring wheat harvest is going to really start ramping up here this next week, and we could see some harvest pressure. We look forward to keeping you updated, on our daily reports, and as these markets move, you can count on our texts as well. Have a great day.